There are three hidden signals right now, quietly screaming at us and yelling. Bitcoin's next explosive move is already here. It's rolling out, and chances are you haven't seen or noticed these signals yet. So first off, we have a massive Bitcoin supply squeeze, and it's happening in real time. Secondly, on-chain data reveals exactly who's scooping up these coins, who's buying the most. And third, people betting against Bitcoin are unknowingly stepping into a bear trap. All three signals are lining up right now, creating the conditions for a potentially massive move and pump. So if you're ready to see exactly what the smart money sees, I'd ask you hit subscribe, like the video, and stick with me until the very end. All these things mean a lot to me because by the end of this video, you'll have a clear roadmap of Bitcoin's next breakout before most traders and the average investor even realizes what just happened. So right now, a silent force is quietly draining Bitcoin from the open market faster than most people even realize. Let me show you exactly what's happening. On April 29th alone, 172,804,254 surged into spot Bitcoin ETFs. BlackRock's IBIT fund single-handedly drove $216,702,104 worth of net new inflows. So in practical terms, that means IBIT was forced to buy 2,241 BTC, locking those coins away at an average price of $96,700 per Bitcoin. Think of ETFs like automated buying machines. Every dollar that goes in doesn't just move numbers on a screen. It actually takes Bitcoin off of exchanges, removing supply permanently from circulation. Now let's zoom out to understand the magnitude of what's unfolding. BlackRock's IBIT fund now holds exactly 601,209 Bitcoins. To put this into perspective, Strategy, which is led by Michael Saylor, of course we know, holds 553,568 BTC, according to their latest filings. So together, just these two entities alone now control 1,154,777 BTC, or 5.5% of Bitcoin's fixed supply of its 21 million coins that will ever be created. So imagine two people walking into a limited edition sneaker store and clearing out more than 5% of the shoes that will ever be made. That's what's happening right now in real time. And here's why that matters so much today. Not next month, not next year, but right now. After Bitcoin's recent halving event, miners now only produce 450 BTC per day. Yet IBIT alone averaged daily purchases of 3,633 BTC over the last week. That means one buyer is demanding more than 8 times the daily new supply of Bitcoin. It's like a bakery making 450 loaves of bread daily, while one consumer places an order for more than 3,600 loaves every single day. So think about it. How long before the shelves run completely empty, like they did during COVID, not to bring it up? So Bitcoin is being steadily vacuumed up. It's being purchased at monumental numbers, and it's being locked away forever. And the float, meaning the available coins on exchanges, is evaporating faster than miners can replenish it. This silent, relentless buying pressure is the first major signal you need to be watching, because when supply tightens this dramatically, price moves don't just happen slowly, they happen explosively. And in a moment, I'll show you the critical on-chain evidence proving who's doing this buying, why they're doing it, and why they aren't just letting go anytime soon. So if you really want to know where Bitcoin's headed to next, you can't just listen to the news. You need to follow the money. And the money's leaving footprints all over the blockchain. That's why we love it. First, take a look at this. Bitcoin's realized capitalization just hit a fresh all-time high. Realized cap sounds fancy, right? But it's just a simple idea. It adds up the price people actually pay for every Bitcoin in existence. Every single coin accounted for at the price it was last moved. And now that figure just climbed higher than at any point in history. And why does this matter? It matters because it proves that every coin are consistently being bought at higher and higher prices, and that those new buyers aren't here to flip a quick buck for quick profits. They're here to hodl, to hold their Bitcoin because it will retire them for life. Next, let's dig a little deeper into exactly who these buyers are. Glassnode's latest heat map gives us a powerful clue. The richest Bitcoin holders, the whales who own more than 10,000 BTC, are still in steady accumulation mode. They're still buying. Even more telling, wallets holding between 10 to 100 BTC just switched from selling to aggressively buying. Historically, this exact pivot signals a key moment. When mid-tier wallets align with whales, we're often entering into a sustainable upward trend in the market. Think of it like a poker game. The biggest players are still confidently adding chips to their stacks. And now smaller but savvy players have stopped cashing out and started matching their bets. Finally, corporations aren't just standing by. They're also quietly entering the game. Semler Scientific, a NASDAQ-listed healthcare tech firm, recently disclosed it bought about 165 BTC for $15.7 million, increasing their holdings significantly. This isn't a random gamble. Semler invested nearly 20% of their annual profits into Bitcoin. They aren't speculating, they're converting profits into Bitcoin the way traditional companies once sparked cash into bonds or treasury bills. This corporate treasury trend expands Bitcoin's use beyond traders and funds into real-world balance sheets. When you connect these dots, the message from the blockchain is crystal clear. Bitcoin isn't just changing hands. It's moving from short-term traders to long-term holders, from speculators to treasuries, from weak hands to strong hands. These are footprints you simply can't ignore. And coming up, I'll reveal how short-term traders betting against Bitcoin may soon find themselves on the wrong side of one of the biggest short squeezes we've seen in years. So don't do that. Don't short Bitcoin. And here's something most people miss. Markets aren't just numbers on a screen. They're psychological battlefields. And right now, Bitcoin is setting up for a move that could catch a lot of traders and people completely off guard and unprepared. Check this out. The funding rate on Bitcoin's perpetual futures contracts just turned negative while the price moved steadily towards $95,000. Now, funding rates may sound complicated, but it's really quite simple. When the funding is negative, it means traders betting Bitcoin's price will fall are actually paying traders betting it will rise. So think about that. Short-term or short sellers are literally paying their opponents to stay in their trades. And why? Because they're convinced Bitcoin can't sustain this move. They obviously don't understand enough about Bitcoin fundamentally. You can't blame them, right? Just send them my channel. But here's the thing. Every time we've seen negative funding during a strong upward trend price grind, which is where we're at right now, it's usually ended one way, with short sellers forced to buy back at higher prices, triggering explosive moves upward. Now let's layer another powerful signal right now, right on top. The MVRV-Z score just performed a textbook perfect bounce at the critical support level of 0.5. Now this indicator isn't as complicated as it sounds either. It simply measures how high Bitcoin's current price is compared to the average price everyone paid for their coins. So historically, when this indicator bounces off this key level, Bitcoin's bull run is nowhere near overheated, meaning it's just getting started. So to give you perspective, at Bitcoin's all-time high in 2021, around 69,000, the MVRV-Z score was above 7. Today, it's sitting comfortably around 0.5. That means we're not overheated, like not even close. We're just warming up. Now, here's the explosive part. Right now, there's a massive cluster of shorts positions piled up between $97,000 and $100,000. If Bitcoin's spot price nudges just a few $1,000s higher, these short traders won't just casually exit their position. They'll be forced buyers. Imagine a crowded theater with one small exit door. One trader rushes out, then another, then panic sets in, and suddenly everyone's scrambling for the door at once, right? Like stampede. That's exactly how a short squeeze unfolds. Forced buyers pile in, driving prices sharply higher at lightning speed. So let's now put it all together. Negative funding rates reveal traders are stubbornly betting against Bitcoin at precisely the moment its fundamentals look strongest. So poor things. On-chain signals confirm we're nowhere near market euphoria. There's still massive upside potential. And with shorts stacked dangerously close to a key breakout level, the ingredients for a dramatic price move are all perfectly lined up. In simple terms, shorts are playing with matches in a room full of gasoline, and the fuse is already lit, is the worst part, or the best part for us. But next, now let me show you just how a tiny spark from the macro landscape of things, okay, macro news and all these things, could ignite the entire setup that I just described, sending prices skyward faster than most people will even know what to do. They won't even know what happened. Right now, macro headlines are everywhere. But there's one critical story quietly ticking down in the background. And it's about to put Bitcoin right in the spotlight. On March 6th this year, President Trump signed an executive order. The number was 14232. It instructed the U.S. Treasury to prepare a detailed plan for establishing a Bitcoin strategic reserve. We know, we're all waiting for it, right? Using seized Bitcoin, currently totaling approximately 214,000 BTC. The Treasury's deadline to submit this plan lands on May, guys, just a few days away from now, which is also the Mexican Independence Day. I'm not Mexican, but I lived around Mexican. So anyway, this is awesome. Go get a taco. Anyway, if approved, this would officially position Bitcoin alongside assets like oil and gold as a strategic national reserve. At the same time, President Trump recently put public pressure. We know this, I covered in one of my last videos. He put pressure on the Federal Reserve Chairman, Jerome Powell. There were rumors he was going to fire him. He said this is not true, right? But anyway, he openly suggested he personally understands the interest rates better than the Fed chair himself.
Interest rates came down despite the fact that I have a Fed person who's not really doing a good job, but I won't say that. I want to be very nice. I want to be very nice and respectful to the Fed. You're not supposed to criticize the Fed. You're supposed to let him do his own thing. But I know much more than he does about interest rates, believe me.
The market is currently pricing in as many as 4 Fed rate cuts later this year. Lower rate cuts generally flood the economy with cheap money, creating liquidity or more money, right? That often flows towards assets like Bitcoin. And historically, whenever interest rates drop significantly, Bitcoin tends to benefit a lot more money. They feel richer. They hear about Bitcoin, all this talk about Bitcoin, and they buy. And it usually kicks off the altcoin season as well. Anyway, adding to this, We have CZ or Shishing, how do you say his name? Changpeng Zhao, or CZ, the former CEO of Binance, who recently revealed at a major industrial conference that several nations are quietly accumulating Bitcoin reserves, explicitly naming Bhutan, the country of Bhutan, as an example. Bhutan has reportedly mined Bitcoin since 2020 and amassed holdings estimated in the billions of dollars. This suggests a potential domino effect as more countries begin establishing official Bitcoin reserves as well. Taken together, these developments all combined are creating an environment ripe for Bitcoin adoption at the sovereign level. A shift towards national Bitcoin reserves could rapidly accelerate the structural supply squeeze we discussed earlier. All it takes is one public announcement from a major government or confirmation of the U.S. Strategic Reserve, U.S. Strategic Bitcoin Reserve, to trigger significant global interests. When the world wakes up to the reality that countries are treating Bitcoin as a strategic national asset, the price impact could be swift and substantial. It's going to be a money grab, guys. Like everyone's going to be attacking to buy as much as possible. And then if we combine this potential macro spark with the on-chain signals we've covered and the explosive short squeeze scenario currently building, well, what do we have? We have a rare alignment of events. The macro fuse is quietly burning, and Bitcoin's breakout could ignite sooner than anyone expects. So right now, Bitcoin signals might be stealing the spotlight, but quietly, something huge is unfolding across altcoins. As I said, we're getting into altcoins today, so here we go. It's called altcoin rotation. And if you're not paying attention, you will miss the altcoin bull run when it kicks off. So let's kick things off with Solana, because right now, Solana is absolutely on fire. We have fresh data from Hansen just dropping, revealing that Solana is crushing it with over 106 million active addresses in April alone. That means it's beating Ethereum, Base, and BNB chain combined. This isn't just hype. It's real growth, driven by developers and investors flooding into the ecosystem. But here's the kicker. 1inch, one of the largest decentralized exchanges in crypto, just went live on Solana. And why did they pick Solana? Because Solana is currently processing 5 times Ethereum's daily transactions, yet, and this is crucial, still has roughly similar trading volumes. This means more users, faster transactions, lower fees. And at the same time, deep liquidity, as Ethereum, a huge win for traders, is looking for efficiency and speed. With 1inch now on board, expect even more eyes, more wallets, and more money flowing into Solana's red-hot ecosystem. Speaking of explosive moves, let's talk AI crypto. I love AI crypto so much. Both are on the bleeding edge of technology and innovation, and you cannot miss this sector of altcoins. The AI sector market cap right now has literally doubled over the past 3 weeks, from 4.5 billion to 9.1 billion. And why the sudden surge, you would ask? And this is because giants like Visa and MasterCard just threw the doors open, wide open, giving AI agents direct access to credit cards. We're talking billions in potential mainstream transactions moving onto crypto rails overnight. And if you want the ultimate example of this rotation in action, look no further than Virtuals. Virtuals is a project quite dear to my crypto heart, I would say. Back when I was CMO at Master Ventures and Paid Network, my team, my marketing team, we launched them on the launch pad. And at the time they had a different name, I forget, but they rebranded to Virtuals. So anyway, this AI-focused crypto just pumped incredible 160% in 7 days, holding steady at 140% right now, backed by $5.7 million of inflows across Ethereum and Solana investors. With the momentum, from their Genesis launchpad in Dubai. Innovative Virgin Points and strong infrastructure support, Virtuals right now is showing what sustainable altcoin growth actually looks like, despite the market conditions lately. That's the textbook altcoin rotation happening right now. What happens is Bitcoin pumps first, okay? Then the large cap winners like Solana step up. And then finally, specialized narratives. Narratives meaning, what's trending, what's trending and doesn't have legs, what's the fundamental technology. So right now, one of the specialized narratives like AI coins, they end up catching wind or fire, the momentum and liquidity that comes in after Bitcoin pumps, and then first pumps, essential blue chips like Solana. Then it rolls into altcoins. And when it does this, it pulls in massive investment partnerships and real world use cases. If you spot this pattern early, you're positioned to capture the biggest moves before the rest of the market even notices. Because the way it works in crypto is that once the bull run kicks off, most of the earnings happen very early on in the pump. That's why you don't want to be missing my videos and what I share with you. And this is why you want to be super switched on every single day right now, because things could switch at any moment. And we're starting to see that, as I explained in the first part of my video. So anyway, you've seen the signals, raw, clear, and powerful. Bitcoin supply is draining 8 times faster than miners can even produce new coins. We have whales, corporates, and funds all locking up Bitcoin away for the long haul, like forever, okay? Squeezing the available supply tighter every day, which is gonna increase the price dramatically very fast. Traders betting against Bitcoin right now are stepping onto like very, very thin ice. I don't advise it. Do not short Bitcoin. And they're paying daily fees just to maintain their risky bets. Like I just don't get it. With a massive short positions clustered near the psychological barrier of $100,000 Bitcoin level, conditions for a short squeeze are building rapidly. And lurking just around the corner is the potential of a macro spark, the United States Treasury upcoming Bitcoin reserve plan, combined with the looming interest rate cut, could ignite these signals at any moment. These are the type of market moves we wait patiently for every day. Signals aligning, opportunity emerging, and conditions perfect for a powerful breakout. So now it's your turn. Let me know in the comments below what price targets you're expecting next. I saw all of your comments yesterday, and I will be responding. It's just been a little busy here in Dubai, but let me know where you see Bitcoin going and what your plans are, what you're investing in. I love hearing from you, and I'll comment back. So anyway, guys, that's the end of this video. Please like the video if you haven't already. It means so much to me. Share this video with some family or friends who need to know what's going on before the parabolic phase of the bull run kicks off, and then they're left behind. It'll be too late. It'll be too hard to, touch them. But anyway, stay sharp and keep watching these signals, and I'll catch you guys in my video tomorrow.